Hello again. Now we are continuing our discussion about insurance law part 2. So the part 1 we already know what is risk. Risk is the possibility of the uncertain event occurs in our life and that unexpected event bring us disadvantages. So there are several ways people use to handle the risk. Here I quote opinion from Professor Abdul Qadir Muhammad. According to him, there are 5 ways people manage the risk. So the first one is risk avoidance. So risk avoidance is the way people respond to the risk by not doing the things that could bring the risk to their life. For example, when you know that going to the mall using the motorcycle could bring you some risk of accident, so you choose not to go to the mall. This is the way you do the risk avoidance. So you choose not to do the things that could bring the risk to your life. Or for example, if you don't want to get injured in doing sports, so you choose not to do the sports, so you avoid the risk by not doing that kind of activity. The second way of people manage the risk is risk reduction. So risk reduction is an action by people to reduce the effect of the risk when it happens. For example, you know that there is the risk of accident and the final consequence of this accident could bring you some mortality. So to reduce that kind of possibility of event or that kind of risk, so you use the helmet, so you use all the equipment for the safety driving. So you know that there is a possibility when you do the driving or you use the motorcycle, there is a possibility of getting an accident. But to avoid you to get passed away by the accident, so you try to reduce the possibility of the risk. And the third one is the risk retention. In this kind of situation, people doesn't do anything to respond to the risk, or on the other words, the person who do the risk retention, they accept the risk. So if you go outside in the rain, you know that there is possibility maybe you will get influenza or fever. So you know the risk. You know that there is possibility if you go out, that kind of risk will happen. But you still go out. So you accept if the risks happen to you. So in this kind of situation, the person accept the risks happen to their life. They know the consequences, they know the risks, but they still accept it. So the fourth one is risk sharing. So you know there is a possibility of the risks, but you share the risks to the others, so the other will undertake the responsibility upon risks simultaneously with you. It happens in the concept of risk sharing in insurance. So in insurance, sometimes the insurance company also share the risks that they take from the insured to the other company. And the fifth one is risk transfer. So this risk transfer is the one that we recognize as insurance. So the concept of insurance is the risk transfer. When I know that when I do some kind of activities in the rain, I know I will get fever. I know that risk is exists, that the risk could be happen. So because I know that the risk could be happen, I choose to transfer it to the insurance company. So here, when I got sick, of course I have to spend money to pay the medicine for myself, to cure myself. So if I don't transfer the risk, this loss, this financial responsibility will be upon me, because I'm the one who have to pay for the medicine, I am the one who have to pay for the doctor. But after I transfer the risk, now this kind of risk, this kind of loss that caused by the risk is now under the responsibility of the insurance company. Or on the other story, I have a building, so I know that there is a possibility that this building will get burned or fire or it get destroyed one day. maybe because of a natural disaster or another kind of natural reason. So if I don't transfer the risk, if I do the risk retention, so I just accept it. So when the flood is happen, all of my building is also lost. So I get lost by that kind of situation. So all the loss is upon my responsibility, because I know that the risk is exists, but I just accept it. But when I know that the risk could happen one day, and then I transfer that risk, so when that risk happened and I got lost, now this loss is upon the responsibility of the insurance company. So this is the concept of insurance. So when we talk about insurance, it's talk about the risk transfer. But the question is every kind of risk can be transferred? Well, that's the one that we will discuss at the next topic. Thank you.